Hello everybody, this is the monthly top-down analysis of the Forex market for the month of October. So we've got an interesting situation here, starting with the euro-dollar, looking at the monthly and the weekly chart. Well, on the monthly chart, we can clearly see how there was an attack on the par level on the one, right? Euro-dollar. Well, that was not successful. This is just testing the level. If it were really broken, well, we would actually see price slip into this area. Well, the target area was around the 080 level. Well, that was a test of the level and it bounced back. That's what we see, right? When we get a strong test, we'll get a strong bounce back into the moving average at 21. So back into the range. Now the interesting question is what is going to happen? And we've drawn these two scenarios last month. So what we get now is, well, we get a pull down, right? It's kind of a counter reaction of this bounce back. You can see that there's a dead cat bounce as well. It's a counter trend, a counter reaction of the bounce. And the question is this a higher low and we break to a new high? Well, then we actually looking to get to the upper range and eventually break that level. That would be an important event. Or we see this as a pullback, and then in the second try, well, we actually break the par level. So we've got these two scenarios. They're both very powerful. If we look on the weekly, well, in the weekly we have seen this this drop lower, right? Consecutive red days, which is this move down of that month, and well, we actually had here a couple of stop and levels. This one was taken out. Well, this one was tested. We have got a double level that was tested, and it could not go lower. Well, next week, if we can break the level, well, then there's a big probability that we actually drop down to the par level because there's no resistance in the way. And should we then break the low here, well, this low, well, then there's a lot of follow through to expect it to the downside. On the other side, well, we talked about it already, where we should move higher. So euro dollar is basically in a squeezing point with good opportunities, right? In both ways. Let's have a look at the euro pound. So the euro pound, it looks quite bullish for the euro, because what we have here, well, that's an S1 pattern on a monthly chart. This is a corona spike high. That's a very important level. It clusters with a big number, but it's as well a stop on level because it's such an exposed wick. And we've got another wick here. So well, this is what it should do, right? It has triggered an entry and it's coming back to test the flat, and we should actually see further bullishness or pound weakness to come in. And if we leave the 900 big number behind, well, then basically we have locked in the next target levels, this stop run level and this stop run level, and we should see more momentum going like we saw before here with big green monthly bars. Let's have a look now at the euro yen. So the yen overall is very weak, and the name of the game is basically to trade yen weakness across all yen cross pairs. We can see it nicely here as well against the euro. So it's in a strong uptrend. We've broken through a good number of stop run levels from back here, and this has generated a nice follow through. So now the target is up here, and we will see how strong the bulls are to get there. There was an S1 pattern on the weekly back then. Now let's have a look at the Swissy against the euro. So the Swiss is very strong against all cross pairs. We see an S1 pattern here. We didn't get a touch of 21, so I don't expect a lot of a strong follow through to happen, but it worked its way lower. Now here at an important level as well, the big number, we get a pullback. So that's clearly a bearish chart, right? And I expect this to break lower. And if you look at the multi-year chart here, well, that's in a clear downtrend, right? And this should actually continue, especially if and when we break this low. That's a stop run level. Well, then we should actually see some price momentum, as we've seen here, some big red monthly bars. Let's have a look at the CAD, Euro CAD. So the Euro CAD is a bit of in a special situation. So we've got this this turnaround reversal type of situation where we've got a quadruple top, if you so want. This was trying to break out. Well, it's always not that easy to break out of a rounded reversal top like this. So it has broken to a new low, like breaking these lows, and then there's a strong pullback. That's what we expect. But this is clearly bearish. There's more potential to the downside here with the euro CAD. Let's have a look at the euro AUD. So the Australian dollar is weak as well. What we have here is an S1 pattern long, and the consolidation high. Well, that's a Corona spike high. That's a very strong level, stop run level. It's a magnet level, right? There's not really any resistance in the way. These are small stop run levels. Well, once we make a new high above the current high, there's nothing in the way, and we should actually move swiftly, at least test the level, which is the very big number, right? The 2 euro odd. So that looks very bearish for the Australian dollar. Let's have a look at the US Swiss. That's a very special pair because it has a multi-year S1 pattern. The triggered back here, and the stop basically was never hit. It makes lower lows, lower highs, lower lows, lower highs. And this is basically testing, like coming back and testing the 200 moving average, making another S1 pattern, not a very nice one because the breakout is very deep, but it comes back and tests the 200 several times, then it dropped, making a new low. So we're basically, what we see here is like we're basically unfolding this S1 pattern from back here. This is a very important stop run level, and then this one, and this is a long way to go. So even if the dollar becomes really strong over the next years, but it looks like the Swissy is much stronger than the dollar. Here's the US CAD. So the US CAD is stronger, the US dollar is stronger than the CAD. It's clearly bullish here. We've got an S1 pattern on the weekly that has triggered nicely. It has run up to the first level, stop run level, then the bull shied away, pull back to the flat, and now we have just broken higher. This week with not much follow through. Well, we'll see next week. Then the next levels is this, and then the big number, and the overall magnet level, well, is this double top stop run level, which is very very strong, and I think we should see more dollar strength against the weak CAD. So the name of the game is yen weakness, and we're going to have a quick look at a few of those yen pairs. This is the US yen, the most important of those yen pairs. Well, we've had an S1 pattern back here, right? Momentum move. This is the S1 pattern, and it nicely unfolded. Well, it unfolded, yeah, going along the measured move of what we saw before the pattern formed. Well, that's not yet completed. Well, the target is up here, and a lot of people were calling this to be the top, but well, the charts tell us, well, it's not the top. This just went into it has tested a stop run level. 1 second. I'm not quite sure. I don't see where these levels come from. It doesn't give me enough history, but anyway, I used to see those levels. So this is just testing 2 stop run levels, and that's just a test. Rejection coming back, gaining more power, the bulls getting more confident. So now we're basically, it's a second try to attack this. Well, the US yen, the yen is in a special situation because in the past, here in end of 2022, we had 2 events where there was a Bank of Japan central bank intervention where they pushed this chart lower, basically going for yen weakness, right? That they don't want to devalue the yen, the central bank. So they have intervened here, they've intervened here. Well, that was the second intervention was at a level where price was overextended anyway. And if we didn't know that there was an intervention, well, we would think that's just normal chart construction, a healthy pullback and an overall strong trend coming back to the 21. And just this week, well, we most probably saw another central bank intervention. We don't see much impact on the weekly chart, but there's talk on the street that there was another intervention. Well, the Bank of Japan probably fears if we break to a new high, well, this should develop into a rush of more yen weakness, right, into the target area, which is the 160 big number. Let's have a quick look through the other yen pairs. Well, they all look bearish, right? Chart goes up against a strong Swissy, very strong bullish chart. The odd yen, even against the weak yen, it looks very bullish, right? So the yen is much weaker than the Australian dollar against the CAD. Looks like we're breaking here to a new high. Well, that should give an addition yen weakness and CAD strength. So these are important levels. And the Kiwi, well, the Kiwi here we've got an S1 long pattern. So this chart told us years before that the yen should have difficulties, right? And this is an S1 pattern. We had other patterns. This was another S1 on a lower time frame. This was an S2. So we're basically now shooting for this level, for the consolidation high to be broken. This is why, yeah, we should actually see good follow through to the upside. Now against the pound as well, a very bullish, bullish chart. With a couple of stop run levels, we cut through those, and now we've made it to new highs, so the yen overall looks very weak. Let's have a look now at a few Swiss pairs. Again, we have Swiss strength, right? You can see it clearly here as well against the CAD. That was an S1 short, and overall in a downtrend, and we've got nice chart construction, breaking to a new low, pulling back, testing the flat here, nice test, then test fails, then it drops, right? Drops to a new low, stop run level. So looks like we're going to see a nice push lower when we break to a new low. So this is what this error stands for. For the time being, we came back and came back to the 21. Even overshooted it a little bit, which is not a problem. Whenever it overshoots, well, you can expect a bigger move down. So I'm actually expecting a bigger move than we saw here. That was already quite good, right? In terms of momentum, well, we might see a series of bigger red bars than we saw here. That just should give them the power to break this double bottom. Pound Swiss. Pound Swiss, well, special situation here as well. That's an S2 pattern, right? You can see how after this big down move, how it's consolidating on a very clear and precise level. Bars are getting smaller and smaller, so there's a volatility contraction. Can be nicely seen on the monthly as well. These are stop run levels, very nice levels and magnets, and it gets down to the par level as well. So that's a cluster area. It's a kind of a cluster magnet area, and we should actually see price to drop into this target area once the bears are strong enough to actually break this flat line, right? The red level. So that's a special situation. Here we've got the pound odd. So here as well we see that more further Australian dollar weakness should come into the market. Back down here we were expecting a move higher, taking out the level. Well, that occurred. Well, this move should continue, right? Stop run move, pullback. That's very normal. Even pull back to the 21, and then we should go and attack the consolidation high, and then basically this high. So that looks pretty strong. So here the bears tried to break lower. They had the opportunity. We had 3 stop run levels very close by. It should have been easy, right, at that point of time to actually break lower and let price slip, right, produce a big red bar. Well, if they cannot do that, well, that shows that they're really weak, being that close, right, to be able to do it. Not being able to do it, well, a failure to follow through, it's a bullish signal, and that's what we saw here. It rebroke, well, it rebroke, executed basically the long signal, bullishness, and now it's unfolding to the upside. Let's have a look now at the Australian Kiwi. It's an interesting chart too, because they're correlated, right, quite correlated, both currencies being neighbors, and this price move tested this price range to the upside, and we said back then, well, there's a good chance, because overall we're in a downtrend, that this was just a technical reaction, that we actually should see that price drops back into the range. Well, that happened. Let's just take that out, and I think we're going to see the Australian dollar to get even weaker against the Kiwi. This is a momentum move. This is a consolidation. I don't see it as an S1. Well, maybe it gets into an S2 type of pattern. And if it breaks lower, well, then we should actually see a duplication, right? A measured move of what we had seen before, and that was quite a thing, right? I mean, the Australian dollar devalued by like 35%, more than 35% against the Australian dollar, and we should see this to continue. Stop on level, that's a double level. So it looks like after this long stretched consolidation, that we're going to see more momentum to develop. So this is it for the month, and we might see some good moves towards the end of the year and into next year.